Today, I'm going to talk to you about a topic which we go over a lot and we encounter through the home buying process, and that is shopping for your homeowner's insurance. Hello, this is David Xie with the Xie Mortgage Team. Some of the most critical things that you go through during your loan process, which is gathering all your income, gathering all your assets, and gathering all your liabilities. While you're going through underwriting, one of the things that you always forget is your homeowner's insurance. And don't wait till the last minute to get this, because I'm getting ready to tell you some of the things that you should be looking for, some of the different companies and things like that that you should be shopping with to get your homeowner's policy. One of the first things that we want to look for is a deductible. Obviously, we all have different financial backgrounds and saving habits. However, a deductible is a big thing, because if you set your deductible too high for anything that's less than the deductible, you're probably going to want to not cover it anyways through the insurance company, because every single one of these claims that you have is going to increase your yearly policy. However, if you set it too low and you have too many claims, that's going to actually increase your actual cost of the insurance per year. So that should be something that you should first consider. The second thing to consider is your coverage. How much coverage are you actually going to need? A lot of things that you want to take into consideration is you want to take into consideration your lifestyle. So I talk to my kids all the time, and we always talk about, hey, every single day, every single second, we are at a crossroads. We're making the decision to the left or the right of the road. Sometimes some of these decisions have consequences. So there may be liability claims. So someone may slip and fall. You may decide, hey, I'm going to play video games inside instead of go out and shovel the snow, and an accident happens. It could be something that's like out of the ordinary, like maybe a comet's flying through the sky and a piece breaks off and hits your house. You just never know. So having the right amount of coverage, especially in today's time, is really, really important, especially with the cost of delivering the supplies, the logistics, the supply chain, and cost of houses are just increasing. So as the materials cost goes up and the labor cost goes up, that means you're going to have to reevaluate your coverage. And I would highly suggest that if you currently have homeowners insurance and you haven't reviewed your coverage, to go ahead and do that now. The third thing that's really big is private or big. We all know about Jake. We all know about the discount double check. We all know about the little lizard that goes around and talks and all this other stuff. Well, those are big companies. And guess what? You're paying for their advertising. The little private companies are good too. But one of the things to really consider is the claims process. What the rating is, A, B, C. Obviously, A is better, AAA is the best. I would definitely consider talking to people that talking to your realtor, talking to a guy like myself who hopefully is your finance guy, and finding out which companies work the best for you. This fourth thing is a big secret out in the mortgage industry, or even the insurance industry, that a lot of people don't know about, and that's mutual companies. So I personally have a mutual company through a smaller firm, okay? However, with my mutual policy that I have, the benefit of that is it's pulled in with all the members of this insurance company. And the way that my policy works is that, there's a initial premium, and the initial premium has high coverages, medium-sized deductibles. However, my annual premium, when the renewal comes up, they come up with a percentage of the annual premium that I have to pay. So let's just say my first year premium was $1,000. Well, my company's never been over 35%. So I'm paying $350 or less per year for my homeowner's insurance. So it's really crucial that you look at everything, including the mutual companies. Sometimes excess coverages really make a difference too. So if you have firearms, if you have jewelry, if you have anything special that needs to be protected with extra coverage, a lot of these insurance companies will cover you. However, guess what? With that extra coverage, it's extra cost. So definitely put that into consideration. If it's something that you don't want to lose, or you feel like if you lost it, it would really huge financial burden to replace it, I would certainly look into that excess coverage, because it's definitely pennies on the dollars to get that coverage. Another thing that's really important to me, and I talk to a lot of my personal customers about getting, and this is available with some companies, not all companies, and that's mechanical breakdown. Mechanical breakdown helps you if there's any major component in the house that's broken down, okay? Now, a lot of these companies have different types of mechanical breakdown, so while you're shopping for this, I would definitely talk to your company about it. With my company, with mechanical breakdown, I had a friend of mine who had 2 boilers replaced, and they would have been $10,000 claims. per boiler. However, it was a $1,000 deductible for each boiler, and she got 2 new boilers out of it. There's also wind and hail. That's a really big one, and water damage. So with wind and hail and water, a lot of time they have a different deductible, and especially with water claims, if you don't have flood and it's flood related, you may not be covered. So even if you're not in the flood zone, especially with all the global warming and all the different things that are going on in the world right now, it may be something that you would want to consider. And with a flood, we can go into that topic on a different day, but there's definitely private as well as FEMA flood, which is offered through the government. And finally, the last thing I would say is a very, very huge sticking point, okay? Whether you're gonna be occupying the home or it's gonna be unoccupied by you, or renters, or short-term or long-term rentals. As you guys know already, if you watched a lot of my videos, I've got a huge passion when it comes to investing in real estate. And short-term rentals are a really big thing. However, they do carry the largest amount of risk. And depending on the minimum days of occupancy that you're willing to let someone occupy a property, that cost can change. If you're gonna live in the house as a primary residence, get owner-occupied coverage. Now that tends to be cheaper because you're gonna care for your things. Unlike if you rent it out, that renter may not care for it as much. So there's risk associated with it, and with more risk, there's extra costs. And then finally with a short term, because there's constantly a stream of different people going in there, they all have different habits. And coming from a guy that owns a couple short-term rental properties, sometimes it's not good. If you have any questions about homeowners insurance, I am not an insurance expert, but I've been doing this for many years and I look at a lot of different policies. I'd love to talk to you about it. You can also reach out to your local insurance broker or agent and talk to them about it. However, if you want to talk to me or my team, we can be reached at 757-478-8493. And this is David Xie with the Xie Mortgage Team. Bye.